Hi, everyone, and welcome back for another Real Vision Masterclass today, sponsored by DeFi Development Corp. We have a great conversation with you. I'm joined by Parker White, Chief Investment and Operation Officer at DeFi Development Corp, or DFDV, the first U.S. public company with a treasury strategy specifically built to accumulate and compound Solana. So I'm really excited for this conversation today. Parker, thank you so much for joining us. How are you doing today?
Thanks for having me on. Pretty good, all things considered, with markets where they're at. But here we are.
Yeah, markets are. I wrote in the newsletter earlier. The markets are quite the roller coaster these days. So why don't we start there, Parker, and get your take on what's going on in the market right now? What are you making of this? I guess up and down swings we've been experiencing. More down, I guess, over the last month or so.
Yeah, I don't know about these upswings you're talking about, but yeah, look, I think there's obviously the 4-year cycle seems to be at play here once again. I think in many ways, what's going on is you look at, and I was just looking at this morning, the AI trade. You look at, let's say, Microsoft, Amazon, a lot of these names, Mag 7 names, and they've kind of 2025, depending on what date you started the year. I mean, yeah, January 1st, fine. But if you started like a week prior or a week after the beginning of 2025, a lot of the Mag 7 names are like flat to down. Microsoft's now down over the last trailing 12 months or so. And so I think there's a lot of jitters about multiples, sitting near all-time highs for the AI trade. And I think effectively crypto is levered tech. As much as we want it to be digital gold, I think you look at just how the average person, the marginal buyer, is viewing the space. And it's just like this levered tech, it's innovation. They kind of stick it over there with AI and robotics. And I think that general trade right now has become a little overheated. And so people are rushing into the traditional safe havens like, metals, but also you're seeing a rotation into more value. So small is catching up. You look at even just the equal weight S&P is doing better. And so I think there's a bit of a rotation to lower valued PE names. And unfortunately, crypto is just seen as like high flying. And so it's getting sold along with some of the AI names. So I don't know. That's kind of my view on what's going on.
Yeah, and I guess you talked about the cycles. What are some signals that you trust when you're assessing cycles? Are you a liquidity guy, user activity, developer, activity? What are some of your signals that you really trust when you look into the market cycles that give you confidence to invest or divest, I guess?
Yeah. So, mostly I'm just thinking about a time-based measure. Is it been 4 years? And it seems like that's what we're lining up with. From a fundamentals perspective, obviously, follow overall, look at the ISM stuff. I follow the Trueflation numbers a lot, real-time inflation reads. Obviously, you look at interest rates and yield curve inversion and kind of all the major metrics that you might look at from a macro perspective. I probably place less emphasis on the on-chain metrics nowadays, just because there's so much buying that can happen via the ETFs, via derivatives, that I think on-chain isn't really telling the full picture. And even on-chain, you look at some of the headlines around, Bitcoin whales are dumping, Satoshi era coins starting to move. And I know some of those guys, and some of them are just repositioning, they're putting coins into one of the ETFs because the options on, say, IBIT are far more liquid than Bitcoin options. And so if you want to run a covered call strategy or some other options-based strategy, it's better to have the ETF rather than native Bitcoin. And so these guys are transferring to do in-kind contributions into the Bitcoin ETFs to then trade options against it. But on chain, it looked like, oh my God, Satoshi era coins are dumping. So I don't place a lot of weight on the on-chain metrics anymore, and more just look at general macro factors that could be affecting any kind of, tech trade.
No, I love the way you broke that down. And here at Real Vision, we have members that are, kind of across the whole spectrum of investing. There are people that have been in markets for decades. There are people that are just entering markets and just entering crypto. I guess last month it seems. And as someone who's been around for a while, what would you say to people that are kind of going through their first real crypto cycle right now and are seeing all of this volatility? What would be your kind of your advice, or what do you think they should understand about entering this market?
Yeah, I mean, it's the obvious stuff that everyone says, but this is a highly volatile market. It's one of the longest duration assets in existence, and so you got to take a long time horizon. So when you're getting in, when you've kind of made that choice, time to enter, you've got a block of cash. I typically say, hey, split it up, do 2 buys or 4 buys over a couple months or couple quarter period. You never know what the bottom looks like. You also never know what the top looks like. And then from there, it's a great asset to DCA. The more volatile the asset, the better the outcomes are from DCA. And so, that's the kind of the surefire way to play it. And then from there, there's a lot of content about the space. It's a very exciting space. And so use your investment as a hook to continue to do the research, to be that kind of fuel or that motivation to do the research, right? Once you have some investment, then you want to go deeper. And as you get deeper, for the vast majority of people, conviction only increases. And so, there's some people that bail, right? They rage quit, at least publicly, maybe privately, they haven't rage quit. But typically, as people go down the rabbit hole, the deeper they go, the more conviction they get. Hopefully, to the point that you stop being just a holder and you start being a builder and you start being maybe an evangelist or a marketer. So, this is really a kind of a global grassroots movement, which is really cool. It's not the story of one company or even one country. This is a global thing. And so, there's an opportunity for everybody to get involved. And typically, it starts with buying a little bit and holding. But then from there, you can become an educator and then eventually a builder. And you don't have to be an engineer to be a builder. There's lots of other roles and opportunities to get involved. So it's a pretty cool space to be in. And I've been in since 2017, and certainly wouldn't change any day of it.
Love that. Yeah, no, I love what you said about you don't have to be a developer, an engineer to build things. And I was at Breakpoint last month, or no, I guess a month and a half ago now in December. And that's exactly what I saw there. Obviously, you had your engineers, but you had people that had no engineering background whatsoever, building really interesting and fascinating projects in the Solana ecosystem. So, real quick, let's just stick high picture before we kind of dive into DFDV and Solana, all that good stuff from your vantage point right now. Like, what are some narratives or sectors that you think are very interesting and potentially, I guess, ripe for investment, or that are attractive investments for you or anyone else in this space?
Yeah. So, I mean, obviously, I'm very bullish on Solana. That's why we run up sold at. And, but also love Bitcoin, been a Bitcoiner for a long time. Certainly believe the Bitcoin story. I think beyond that, some trends that you're really going to see, obviously stable coins. Everyone's talking about stable coins and the Genius Act, kind of validated stable coins. But I think extending beyond that, there's a real trend towards real world assets on chain, RWAs, which, I remember back in 2018, people talking about security token offerings, STOs, and people have been talking about, bringing RWAs on chain back then. But I think they're finally catching on. Similarly to how, people were playing around with prediction markets back in 2016 with, I don't know if people here remember Augur. And even I think Gnosis was a kind of a prediction market way, way early on. And so, prediction markets finally caught on, right, with Polymarket and Kalshi and so on. So I think RWAs are going to kind of have that prediction market type moment where people have been talking about them forever. They've been kind of left for dead, but I think they're finally starting to see some traction. And with the with Clarity, which hopefully, this week, next week, something soon, I think that'll be some real fuel to the fire there. And there's some clear advantages to having equities or any asset trade on chain. And that's, of course, the 24/7, 365 liquidity.
Mhm.
And with, US equity markets in particular becoming much more global, right? Mini stocks in the S&P 500 or in the top US names are majority traded outside the US, whether that's Korea, Japan, Europe. And, for Koreans, it kind of sucks, right? You're trading 12 hours different. Like you got to either stay up late or wake up crazy early to get a piece of the action. So why not be able to trade these assets on chain? It makes no sense that equities aren't 24/7, 365 tradable. So I think that point alone is going to be a catalyst for real world assets, RWAs, but there's a whole host of other ones around, yield bearing instruments, credit type instruments, and just the global accessibility, the fractionalization, the portability and composability. There's so many reasons why I think RWAs are going to be kind of the next narrative in probably here in 2026, and will really, I think, take the platform chains, the L1s like a Solana, really to that next level.
I love that you said that. So let's dive into Solana, right? Because that's Solana over the last few years has just been an absolutely on fire narrative. Everyone in crypto obviously knows Solana. I think majority of people probably hold a little bit themselves, right? And obviously digital asset treasuries have also, been talked about quite a bit. So let's dig into the why of that. But first I want to ask you, like, why are you on Solana? What makes Solana stand out for you maybe over another ecosystem?
Yeah, I think it's ultimately that it just works. And there's a bunch of reasons to that, and I'll kind of dive in. But ultimately, from a scalability perspective, it's here today. It works. On October 10th, when markets blew up, and I think Ethereum had block fees getting up to like $500 a transaction, or sorry, not block fees, transaction fees. Um, Gas fees, like Solana stayed under $1. I think it was under 50 cents. Even many of the L2s, like a Base or an Arbitrum, saw transaction fees spike because they're ultimately anchored to the Ethereum L1. You had exchanges that were having issues. Obviously, Binance had all of its issues, and Solana just kind of works. Sometimes you got to spam some transactions, right? The RPCs, maybe you have to put a few through, but like people were able to land transactions and move small amounts. And this is where Solana is technically still in beta. And so this is like still early days for Solana. You think about Visa when it first launched, or PayPal when it first launched. We're only a couple of years, we're not even a decade past the launch of Solana. And so I think there's a lot of ways, a lot of room to run, a lot of room to go from an improvement standpoint. But today it works. And so, thinking about building on it, you're not hoping on a future promise of like, oh, well, maybe the L2s will work, or maybe this, I don't want to call it names, but maybe this sharding thing will happen. Or maybe on the flip side, maybe hopefully liquidity will be built up and the wallet infrastructure will be built up, and then I'll have users. And so I'm kind of building for this eventual future. It's today you can build on Solana. There's ample liquidity for retail usage. There, even institutional usage. I mean, we use the chain all the time at scale. And there's ample infrastructure, the wallet infrastructure, the bridging infrastructure, any of the RPC infrastructure you would need. It's here today. And so if you're an app developer, you don't have to build on a promise. You can just build an application right now on Solana and get a lot of users, build a very viable business. And for developers that want to test out the one man unicorn idea, right? AI coder, one man army. I think there's no better place to build than on Solana, because all the backend infrastructure is already there for you, and you can just acquire users very easily. So that's kind of the builder or developer pitch for why Solana.
Yeah, I love that you said that, because Solana. One thing I've noticed as I first started using Solana in particular, I'm not like you. I'm not going to name any names, but it just really felt like for once a crypto ecosystem was building with the user in mind, and even having in mind that the user may not be a complete expert in crypto and technical knowledge. I thought that was a really big differentiator for Solana, just as somebody who's been using it from for a while now. So I want to kind of talk to you about digital asset treasuries. So high level, can you walk us through how a digital asset treasury functions? Like, what does it do? How do you guys acquire assets, manage collateral, generate returns? Just kind of walk us through the big picture of what a DAT does.
Sure. So, obviously DATs were popularized by MicroStrategy. Michael Saylor started back in 2020. And for a long time, he was the only one effectively. But the general idea is if you think about a regular company, they have assets on their balance sheet. They're going to have a mix of liquid assets like cash, and then also illiquid assets like GPUs or like IP or buildings or trucks or what have you. And the whole function of capitalism is you take these assets that the company owns and then you deploy them to grow value, to grow shareholder value, to ultimately grow that asset base, right? So NVIDIA uses their IP and their factories and all the things that uh, make up their asset base to create GPUs, to sell them, to grow that asset base. And when you're buying shares in the company, ultimately what you're buying is this growing asset base, because at some point, that asset base is going to be used either to pay out dividends or to do share buybacks. It's going to grow the value of the equity. So that's a business. That's a regular business. So what MicroStrategy said was, well, we've got all this cash, but it's just sitting in treasuries, slowly losing value over time. And there's this new emerging phenomenon of digital assets. So you've got physical assets, you've got like fiat assets, but now you have digital assets. And so in the same way, companies, DATs, digital asset treasuries, can utilize that capital to grow shareholder value, to grow the asset base over time, to create equity value for the shareholders. And so you could say, well, but an ETF also does that, right? Like they can just hold the asset and it's going to grow over time if the asset goes up in dollar terms. And the idea here is, well, yes, you could also buy, say, a real estate ETF, right? But you probably want somebody to manage that real estate property. You want somebody to be looking for new properties, maybe buying ones, fixing them up, then selling them. You want somebody with some creative know-how to create some value out of the assets. You don't just want the asset to passively sit there. And so the idea behind a DAT is you bring in a smart, trusted, experienced management team, and they can utilize that asset better than a passive holder could, like an ETF could. And over time, they can grow, they can compound the assets on the balance sheet on a per share basis. So getting into MicroStrategy, they've been able to grow their Bitcoin per share pretty significantly since they started, many hundreds of percent. And that's allowed them to outperform Bitcoin since they started by a meaningful amount. Now, of course, that also leads to a significant amount of volatility, right? So on the upside, they go up more. On the downside, they go down more. But over a full cycle, at least over the last 6 years, they've outperformed. Now, that brings us to other DATs. And the idea is roughly the same, but using a productive asset like a Solana opens up a much larger chunk of the playbook versus an unproductive asset or non-productive asset like a Bitcoin. So I'll kind of stop there, but that's like the real high level pitch for why a DAT makes sense.
Yeah, so I guess I want to kind of touch on that because I see it used wrongfully, right? But interchangeably, ETFs and DATs. I think it confuses a lot of people because there's like, well, an ETF is holding the crypto, right? And you did touch on that, but from like an investor perspective, what advantages would you say a DAT investing in a DAT has over that of an ETF or vice versa?
Yeah, so I think the two primary use cases for an ETF, the two primary reasons you might want to hold an ETF would be one, you want to just trade it around. So you think, Sol's going to bounce here and it's going to go to 110 and you just want to like quickly play that and you just want exposure to the underlying. You don't want anything else that could any other factors involved in that trade. So great. ETFs are like great for expressing a short-term bet because you get like one-to-one exposure to the underlying. The other reason is you think all management teams are idiots and they're just going to destroy shareholder value. And you're like, you know what? I just want passive exposure to Solana in our case. And I don't want any other layer on top. I think everyone's dumb. And so I just want that passive exposure. And that's fine. So those are 2 reasons to hold an ETF. The reason to hold a DAT is you have a long-term fundamental conviction in the underlying asset in the ecosystem. So you say, hey, I like Solana, and I think Solana is going to go to $1,000 a coin, $10,000 a coin over, let's say, the next decade. We have a price target for $10,000 a coin on Solana. So you think it's going to go much higher. And that's because Solana is going to move from being this like kind of crypto niche thing to like global financial infrastructure. All 7 billion people on the planet interact with Solana, whether they know it or not. They just are using their apps and they're sending money around, or they're trading, or they're playing games, whatever. And on the back end, they're using Solana and they don't know it. So that's kind of this like decade-long vision for Solana. Or, you could have a similar vision for Bitcoin, maybe some different specifics, whatever. And so you say, okay, I want to put my money to work, and this is going to be a 10-year investment. This is not a short-term trade. And I'm willing to take a bet on a management team that can grow my exposure over time. So Solana is going to average, let's say, 40% or 50% over the next decade, ups and downs. Sometimes it'll be down 50, sometimes it'll be up 100, whatever. Then I'm going to place a bet on this management team, on this debt. And my hope is that they're going to be able to grow at 60% a year, or 70% a year, or 80 or 100 maybe. They're going to be able to outperform. And sure, on the downside, they're going to dip more probably. And that's just kind of, comes with the territory. But over the long term, I think this management team is going to be able to outperform. And so I want to place my bet with them on the DAT versus just passively holding the ETF.
Yeah. So do you see? So we touched on RWAs, right? And I love that you mentioned that it's a bet on the ecosystem as a whole as well, as opposed to kind of just that passive exposure to it. Do you see, are DATs like accumulating anything else beyond the underlying tokens? So let's use Solana as an example. Like, are you guys accumulating just Sol and maybe Solana adjacent coins, or like NFTs, RWAs, something in consideration to be adding?
Yeah. So the real promise that we've given to our investors is that when you buy DFDV stock, you are, and I can mostly speak for ourselves, other DATs are doing other things, but our promise to investors is that you are getting exposure to Solana, to Sol, the asset. Now, we might play around the edges, right? So we hold some stable coins in reserve. We can use that to generate yield in stable coins, denominate stable coins, which can flow into buying more Sol. We stake our own Sol to our own validators. And then those validators can be staked to by others. We have an LST on the validators that others can use. And we've gotten the LST integrated all throughout the Solana ecosystem. So we generate revenue from that. We can also help bootstrap liquidity on new projects via token deals, where we may say deploy either Sol or stables, and they'll give us some of their token. We're not buying that token. We're just getting it as additional benefit to deploying the liquidity. And then we can, in many cases, sell those tokens into the open market at an opportune time to accumulate more Solana. And there's some other things over time that we'll be doing. But ultimately, we want to provide exposure to Solana, because if Solana rips and our stock does not do well, then investors are going to be upset. And so we are accumulating Solana. We're playing around the edges to try to grow value on top. But the core asset holding is Solana.
So let's talk about DFDV, DeFi Development Corp. You obviously touched a little bit about, kind of your mission and your goals, and I want to ask you more directly, what exactly is your goal? Like, just strictly accumulating more Solana and maximize, shareholder revenue? Like, can you describe what is your guys' mission, how you guys came to be, and kind of what your goal is in this space?
Yeah. So our ultimate mission, why we started the company, is to serve as a bridge. And that's, got the logo here on the hat. We want to serve as this bridge between TradFi and DeFi. And, we all came from Kraken, the whole team. We've been in the space for quite a while. And so that was part of Kraken's mission as well. And that's kind of ultimately should be the mission of most of crypto, is being this bridge. But we very explicitly see ourselves as this bridge from TradFi into DeFi. And what we say is we want to bring TradFi capital into DeFi and DeFi returns into TradFi. So kind of this two-way flow of value. Now, for us, we think DeFi is primarily going to be developed on Solana long term. There's probably going to be some other chains that are winners, but we think Solana is going to be the leading chain just because of where it is today and all the things we talked about. And so we felt like building a treasury business on Solana was the best way to kind of accomplish this mission of providing this bridge. Now, on a company metrics level, our North Star metric is SOL per share growth. So everything we do should flow back to accumulating more Solana per share that we have of common stock. So sure, we could just sell a bunch of shares into the market, running the ATM or whatever to dilute. But if that means less SOL per share, then we're destroying value, right? We're not creating value. Even though maybe the balance of the SOL on the balance sheet is growing, we're not growing it on a per shareholder basis. So everything we're doing is focused on SOL per share growth. And our kind of long-term target, our long-term guidance is 1 SOL per share. That's kind of this metric that we're shooting for over the long term. So right now we're at about 0.07. You can see the metrics there. So got a long way to go towards that 1 SOL. But there's a number of catalysts that we think will help us get there over the long term. So everything we do is about growing that Solana per share to give investors that, kind of heightened or expanded, levered, you could say, exposure to Solana and ultimately the Solana ecosystem, because the ecosystem fuels the token fuels the ecosystem, and these things kind of are interrelated. And so, of course, we're trying to expand the ecosystem as well, the secondary goal, and bring users in and grow Solana. And that's part of what we're doing, but certainly never at the expense of growing SOL per share. So SOL per share is that kind of North Star metric for the business.
Now, I want to touch on something that you mentioned just a couple of minutes ago. You guys have grown, your Solana treasury significantly, right? You mentioned that you guys operate your own validators and generate yield, and you also do staking as well. So, what's the strategy behind, your validator operations versus just simply staking and taking those yields to buy back more SOL?
Yeah. So by running our own validator, first off, we are vertically integrated. So we capture the entire full stack of the returns. So there's no fees going to a third party. So that's great. The other thing is we can, by having the LST on top in particular, third parties can just stake to us, but increasingly people want to use LSTs to effectively use their SOL even while it's staked across DeFi. And so by having our own LST, we can really provide a vehicle for the on-chain folks that don't want to hold a DAT, that just want to be fully, kind of self-involved, kind of run their own investment strategies. They can use our LST as one of the best performing LSTs in the space to generate yield, and then also maybe borrow against or run, basis trades against or so on. So I guess the last piece to our validator strategy is the partnerships. So we've partnered with Bonk, we've partnered with WIF, we've partnered with a few others to launch branded validators for these guys to allow them to benefit in many of the same ways, and also kind of leads to a bit of a marketing kind of collaboration there. But ultimately, the idea with the validator is to maximize our own returns and then provide a pretty attractive offering for others that further generates, some fee revenue, minor fee revenue. We don't charge a lot in fees, but some minor fee revenue for the business to further help grow that SOL per share.
Now, how do you balance that with risk management? Like, how does risk play into all of this?
Sure. So on the validator side, there's really not too much risk. Staking is all done on a delegated basis. So even if the validator is compromised, no coins by third-party stakers are lost, which is great. So the validator is a pretty low risk operation. Of course, we follow all the best security practices, on how we store the hotkeys and how we do the backups and, multi-sigs for the withdrawal keys, that kind of thing. The biggest risk within the business is our effectively the leverage, right? So we take on leverage. We borrow money on a unsecured, for the most part, basis in public markets, but we do have to pay interest on those, and they do have maturity dates. And although they're many years out into the future, if Solana, say goes to $10 a coin and stays there for 5 years, then we might have some problems, right? So the biggest risk is going to be how much leverage do we take on? What's the structure of the leverage? Avoiding issues where we have a 1-year bear market, a 2-year bear market, a 3-year bear market. I mean, hopefully we're not having 4-year bear markets here, but these things can certainly happen, right? It's a volatile asset. And so it's kind of managing the capital structure and of course the costs and the overhead as well. That's kind of the, I'd say, primary risk within the business that we keep an eye on.
Now, I want to circle back to your SOL per share metric, because I think that's a very interesting way to kind of do it, right? And you talked about your goal getting to like $1 or 1 SOL per share, right? How do you get there? Because right now you're at 0.07. What is the path that you can envision to getting to that 1 SOL per share?
Sure. So there's a number of different avenues. Obviously, there's the capital markets playbook. So this would be the MicroStrategy playbook. So this is things like running the ATM when the stock is trading at a big premium to NAV. And that allows you to grow pretty quickly. I believe in last year, we grew at about SOL per share by about 150% or 200%. It kind of depends because we started in the year. But like if you look at, say, the last 6 months, it was north of 100%. So you can run the ATM. You can also raise capital via debt and increasingly these preferred offerings. So MicroStrategy has their STRC, which is variable rate, non-convertible preferred. There's other preferred offerings, but that's been their most popular. So we can do that, and that helps us grow SOL per share. And we have an offering up, prospectus filed, ticker symbol CHAD on this one. So you can go check it out on the SEC. It's not been launched yet, but you can see the SEC filings on it. And then, so that would be what I'd call kind of the inorganic playbook. That would be the playbook that MicroStrategy runs, where essentially you use the capital markets to pour gasoline on the fire. For us, though, we've got a second component to the playbook, a second side of the playbook, and that is the organic piece of the business. So this would be things like running the validators with staking, with third-party delegation. This would be things like our Treasury Accelerator program, which is helping to launch DFDV branded DATs in other countries. So we've got DFDV UK. You can go check that one out. DFDV is the symbol there on the London Stock Exchange. We'll be, over the coming, say, 6 months to a year, be launching hopefully some more. And so we get economics from that as well. We can also do things like these TVL deals and some of this on-chain activity where we can generate, significant above market yield. We can also seed some of these early projects with liquidity and get outsized token grants, which we can then sell. So there's a bunch of other things, a few other things, really big ideas that we haven't, fully shared yet. But there's a number of things that we can do on an organic basis to grow the SOL per share. And then you bring that inorganic, the capital markets activity, and you just pour that fuel on the fire when things are going well. And that can really accelerate things, really launch things forward. So the example I like to give is that in 2024, when MicroStrategy was really growing quickly, they grew Bitcoin per share by, I believe it was 74%. And they were already a pretty giant business, right? They'd gone from a very low base. They were already very large. So if they can do that at that scale, 30, 40, $50 billion worth of Bitcoin, then for us, we've got $250 million worth of Solana right now. We can apply that same playbook and grow very quickly, I believe. And so there's a kind of a bunch of things at play here, but we do think we can get to that 1 SOL per share. That's the guidance, and we're working towards it.
Love that. Yeah, definitely looking forward to seeing that. So you mentioned a ticker, Chad, right? There's another ticker I want to talk about briefly here is don't, which basically has a message telling people not to buy it, right? So can you talk to us a little bit about what was the intention behind that, and what do you want to the community to walk away with from something like that?
Yeah, look, so with Don't, it's kind of a bit of an experimentation, right? Obviously, meme coins have been central to Solana long term. Well, in the early days, especially in um, let's say this, revival from the last bear market, right? Everyone left Solana for dead, and then it kind of came back, and it really did well because of meme coins, because of Pump, and some of the other platforms. And so I think, if you're going to be a really ecosystem native project on the Solana side, I think a meme coin makes a lot of sense. Now, certainly not, hyping it up too much, certainly wanting to avoid, any kind of pump and dump craziness, whatever. But I think a meme coin can actually be an important part of our long term kind of ecosystem. There's things that we can do with a meme coin that we can't do with our stock, even though we have a tokenized version of our stock. DFDVX is the symbol. We can do things like giveaways. We can do things like airdrops. We can do competitions. We can do interesting governance things. Hey, meme coin holders vote on this particular thing, or we're going to then maybe launch an NFT project. I'm just making things up here, but launch an NFT project, and the meme coin holders have some kind of involvement there. So there's a bunch of things that we can do to experiment with the meme coin that we just can't do with a stock, with a NASDAQ listed, SEC regulated stock. And
Mhm.
maybe some other on chain projects that have a regular wise token can do things with that token that we can't do with the stock. But with the meme coin, we've kind of got this full license to experiment. So we do say, don't buy it. It's a little bit tongue in cheek, but also like, look, this is not something that we're like going to try to pump to the moon. This is not like, we're not advising people to go buy this. This is not like tell the grandparents to put your life savings into Don't, right? Like, it's a meme
Right.
coin. It literally is disclaimer coin. Don't buy it. But there's a lot of kind of experimentation that we can do on the corporate side that we think makes it an interesting project for us.
And I think that's what makes Solana and I guess speaks to you guys at DeFi Development Corp as well, is that you're just willing to go where the market is and meet people and experiment in things, and I think that's a very important thing that you want to see from ecosystems and people building within those ecosystems. So obviously meme coin prices are down, right? The market is just down, which we touched on before. And your guys' stock price isn't immune to that, right? Because the market is just not great for crypto. So I want to ask you, like, how and I guess this can go just to a broader question, but since we have you here, how can someone, like, how do you turn this around beyond just like blaming the broader market? How do you turn around a price that's down?
Yeah, I think there's two aspects to it. Obviously, the first one is the market, right? We are a SOL treasury vehicle, and you need the price of SOL to go up for the business to go up, unless we want to abandon being a SOL treasury vehicle, which, I think that'd be a terrible idea for our shareholders and, for the entire mission of the company. And so we can't escape the macro reality of what's happening in Solana, what's happening in DeFi, and you sometimes just got to sit and wait. So that's one aspect to the story. The other aspect, though, is building a strong foundation, building projects, experimenting, developing core drivers, or developing organic drivers to the business, so that when the market does turn around,
Mm.
the story catches back on. And, when we launched back in early 2025, it was April 4th, I think it was 2025. In the following 7 weeks, the stock was up 9,700%, which is pretty wild. We
Yeah.
closed the year at up 615%. I think we were the fifth best performing stock in the US, just, across the board, all stocks together. Best performing DAT, certainly. And so that was certainly during a bull market, right? Things were booming. And so we want to continue to build the story, continue to build the growth drivers, launch the projects, or help launch the projects, maybe even incubate and launch some things internally, that when the market turns around and Sol is knocking on the $200, $300, $500,000 door, that DFDV is, massively outperforming, the underlying. And so while the underlying's down and interest is out from crypto, it's tough to really escape gravity. But I think we really want to build the best rocket booster, the best engine, so that when things come back, we do really rip. And an analogy I would give is the Bitcoin miners, where they pulled back in the last bear market back in 2022, whatever. And in the following bull market, some did pretty well. They kind of pivoted into this AI play and this hyperscaler play, but some didn't. Some kind of stuck with the old messaging, didn't really build the infrastructure. Maybe management took giant compensation packages and just kind of sat around. And these miners didn't outperform Bitcoin to the upside. And so now is really the time to be building. I mean, this is the same for any crypto project, right? Whether that's an on-chain project that has a coin, whether that's a big exchange, whatever. Now is the time to be building, so that when the market comes back, you are one of the winners, not one of those that gets left behind. And so ultimately, our business is about building this foundation, this rocket booster, so that when things come back, we can, fly again.
Yeah, I think that was a very powerful answer there, Parker. It's like you're focusing on what you can control and not focusing on the things that are outside of your control. And I do think that for any company inside crypto or outside of that, ultimately will lead to success for the most part, right? So you guys have been pretty innovative on, the capital market side as well, from equity raises, right? Preferred stock offerings. How does that strategy and how do those raises support you guys accumulating more Solana? Is it as simple as, hey, we raise $125 million, let's put that all in Sol? How does that process work?
Yeah. So, I mean, that is effectively what it is, right? So like the convert that we raised, it was about 122 and a half or something million. And we're paying 5.5% interest on that. So and it's not a margin loan, right? The price of Sol can go to $10 or $1. As long as we can pay the interest payments, we can't get liquidated there. Now, obviously, it'll mature at some point. We have to pay it back at maturity, which is in 4.5 years or so. But that was a great example where we are able to borrow money cheaper than any individual. I personally can't go out there and get a 5-year unsecured loan for 5.5% and use that to buy Solana. Now, the big thing with the capital markets activity is you are selling a decent amount to institutional investors. And with that particular convertible raise, it was 100% institutional investors, only large funds. And so there's a lot of education involved. And these guys look at, hundreds, maybe thousands of investments or themes a year. They are going to spend 15 minutes, 20 minutes looking at a Solana deal. They are evaluating Solana and robotics and, maybe distressed mining companies, gold mining companies and consumer packaged goods, whatever. And so you have to tell a very succinct and interesting story for why an investment into DFDV makes sense. And a lot of that goes back to telling an interesting story why Solana makes sense. So if you're maybe even a little bit scoped, if you're a technology investor, you're a technology focused hedge fund, you're a TMT hedge fund or something, and you're looking at, emerging trends in payments and obviously AI and robotics and all these things, you need to be sold on the story of Solana and why the ecosystem is going to disrupt finance at large, and then why you would want to invest in DFDV as opposed to investing in an ETF. So there's kind of a couple layers of the sales pitch, but it ultimately comes down to building trust. And for many of these guys, we talked to them once and they said no. And then we talked to them a second time and maybe they'll do a little bit. Talk to them a third time. Maybe they do a little bit more. And so that's what you see, and MicroStrategy has done really well at, is Michael Saylor's just over and over and over said the same message, been consistent, bull market, bear market, doesn't matter. He's out there telling the message. And so that's why they're able to raise billions of dollars on these preferreds. It's because the investors are coming back for more. It's not the first time many of these investors are getting involved, and certainly not getting involved in size. These are investors that have been with MicroStrategy for a while, believe the message, seen them execute, and are willing to put more and more capital to work. And so this is kind of, when raising capital, it's really a trust-based game where you continue to say what you're going to do, and then do what you say you're going to do, and then say you're going to do something else and do it, and just over and over, be consistent, be there, telling the same message, not doing anything, crazy, not doing anything illegal, whatever. And that helps you to raise more and more capital over time. But it's kind of this trust game.
Mm. Now, I want to kind of transition a little bit to the regulatory stuff, right? Because obviously, crypto, it's tough for us to move forward without getting that regulatory clarity. So I want to ask you, with the Clarity Act and Genius, like how do you think that will help your guys' strategy over at DFDV?
Yeah, I think it really legitimizes and validates what we're doing, what the whole ecosystem is doing. But we, us providing this easy on ramp, this easy bridge, a mutual fund, an ETF, a hedge fund, a family office can just be like, you know what, this is interesting. I should have exposure to it. Click buy. There's no onboarding with a Coinbase or a Kraken, and then figuring out how you're going to manage coins and multi-sig and who's going to have assets or control of the assets. Like, there's none of that. It's just buy the thing in your brokerage account, and you can use it as a portfolio margin, as collateral, just like any other stock. So us providing that bridge, obviously will benefit from that. But I think the big tailwind here is the legitimizing, or the legitimacy that's brought from Clarity, from Genius. And so we've talked to, I'll give an example. We've talked to a banking consortium in a large state. I won't name won't name the state, but it's a large banking consortium of all of the kind of small community banks, 1 or 2, 5, whatever branches in small towns. And they are looking at launching a stablecoin because they realize that their users over time are going to leave them for fintech apps that offer stablecoins that maybe have like yields, or I know that's a dirty word regarding Genius. So they have rewards, or whatever. But, banks are being disrupted by stablecoins. And so now with this regulatory clarity, banks, as an example, are forced to get involved, whether they like it or not. The Grim Reaper is coming for them, and they have to have a strategy. And you can't, shifting away from the banking side, you can't be an investor anymore and just be like, well, all that crypto nonsense is rat poison, like Munger said. It's going to go away, whatever. It's now like, hey, actually, no, this has been debated in Congress, and we've had bipartisan legislation around it. You increasingly look like a fool if you don't have crypto exposure, versus before you looked like a fool if you had crypto exposure. And so kind of flipping that on its head is really powerful. And I think another, kind of anecdote here is I talked to a decent sized investment advisor, private wealth management. They've got, clients, and they've got this kind of all weather portfolio where they have an allocation to gold. And very recently, in the last 30 days or so, they have rotated that gold allocation from gold into Bitcoin. And they think it's going to be a relative value trade. There's going to be a catch up, gold's overheated, whatever. They're not crypto degens. They don't fully believe the story yet, but it's now like this very rational part of a global allocation portfolio. It's like, yeah, just drop some Bitcoin in, take some gold out. And then, maybe you rotate some tech in later and extract or move some energy stocks out. Like, now Bitcoin and crypto at large is part of the global asset allocation mix. And I think these, hopefully two, but at least one congressional act really put a stamp of approval on it. And so gives investors globally license to kind of get involved, which is great.
Yeah, that goal to Bitcoin swap there is definitely not something you would have seen an asset manager talk about a couple of years ago, right? So it's just crazy to think how far we've come. So once we do, let's say we start getting that regulatory clarity, we get some guidelines in, in these institutions, asset managers, family offices, they feel more comfortable entering into this crypto space. Do you see them more allocating through DATs, ETFs, or like why wouldn't they just buy up their own Bitcoin and hold it on their balance sheet, or Solana and hold that on their balance sheet? How do you see them kind of playing this space?
Yeah, so for the majority of asset managers, I mean, I don't know, I could probably just say all asset managers, they don't want to set up new custody infrastructure. They've
Mm.
got trading systems, they've got order management systems, they got a prime brokerage account, maybe. Um, they are firmly plugged into the legacy financial system, whether for stocks, bonds, funds, what have you. And so to set up an entire parallel infrastructure for a single asset that's not going to be the core asset for their whole business, the risk reward there, or the return to time spent trade-off, is just, it's not there. And so that was the power of the ETFs. And of course, the power of, the DATs as well, is giving somebody a Lego, a building block that can just plug right into their existing infrastructure and it just works like everything else. So now you might ask, well, why would they hold an ETF over a DAT? We've talked about that quite a bit. But I think, a lot of these guys, they might start with an ETF allocation, although there's many funds out there that actually cannot hold ETFs or other funds as part of their mandate, as part of their investment policy statement. This could be, say, mutual funds, tech mutual funds. This could be large pensions. There's a lot of people that actually need to own a 40 Act, a 33 Act company, not a 40 Act fund, right? They need to own a corporation. But for assuming those restrictions aren't there, some people certainly probably will start with an ETF. But over time, just like you might, say, buy a gold ETF to get a little exposure, you might want to diversify, and you might like that upside exposure from, say, the gold miners. Or maybe in some cases, the investment thesis is much stronger on a long-term basis for a commodity, for the commodity producer. You could look at like an energy company versus oil is the parallel I'm trying to draw here. And so over time, people might say, you know what, this DAT narrative is really compelling, this active management, this increasing SOL per share or Bitcoin per share, what have you. And so I'm actually much better off buying the active management, the company doing something with the asset versus the passive underlying. So I think ETFs are maybe the gateway drug in some cases. In some cases, DATs are the gateway drug. But I think over time, value is going to more flow to the DATs just because of that active management layer and that ability to grow asset per share, NAV per share over time.
So I want to kind of now zoom back out. What do you think, or what excites you most about the future of the Solana ecosystem? And then I want to kind of pivot that into a DFDV question. But firstly, what excites you the most about the future of Solana and where you see it going?
Yeah, so the way I view Solana, and this goes back to a lot of Balaji's network state stuff, but I think of Solana as an economy in the sky. It's a cloud economy. So you've got the economy of the United States, you got the economy of Korea, you got the economy of whatever country, or even like a union, European Union or whatever. But what you also have is the economy of Solana. And it's very powerful. It's a very powerful economy. And so we go back to, the Solana page. I talk about the everything capital market. You think of, a slogan for a while was internet capital markets. But ultimately, this economy is going to specialize in capital allocation at a very high macro level. The Solana economy will allocate capital more efficiently than any economy on planet Earth. And all of these other physical, real world economies are going to plug into the Solana economy for capital because they're building something in meat space. They're building a factory. They're building an airport. They run an airline, whatever. And so I see Solana as this capital allocation economy that's going to grow to encompass all of global finance, all of global value transfer. And that's not just stock trading or bond trading, but that's going to be payments between humans, which today is a big market, but also payments from humans to machines and machines back to humans. And then maybe even bigger than all of those combined is going to be payments, value transfers between machines, right? So we've seen a lot of growth around Claude-bot or Molt-bot. And now we've got Molt-book, and these machines are needing to interact. And, maybe it's a little crazy, silly example for now, but certainly what's the payment rail they're going to use? These guys can't have bank accounts, right? And so I think the Solana economy is going to be, again, I'm just keep saying the same thing over and over, but it's going to be this global capital allocation infrastructure for the entire globe. And if Elon has his way and gets us to Mars, then it's going to be this capital allocation infrastructure for the entire universe. And so it's a very, very big TAM, a very big vision, but I think that's where we're going. And I think if you use it today, if you just play around, you download a Solflare wallet, you do some trades, you buy some stocks, X stocks, you buy some tokenized gold, then you swap to dollars and pay your buddy in, halfway across the world, you start to see the power of it. And you start to see like, oh, this is really possible. And you give your Claude-bot a wallet and it can start to pay for things. And you're like, whoa, like I can see the future here. It's the early days, but I can see the potential. And so I think that's where Solana is going. And I think has the capacity to do so today.
Mm. Now, in that exciting future, right? Where does DFDV play into that? So now let's take that, right? We're in that future already, and you have 1 SOL per share already hit. You guys, what would you have done right to get to that point, and how do you envision yourself in that future of Solana?
Yeah, so ultimately we see ourselves as this capital allocator within Solana. I don't really want to use the word bank, but some type of like proto, neo, like bank type organization. Again, a capital allocator. And ultimately, you need to be helping to drive the ecosystem forward and finding these pockets of mispricing where there's a new trend, there's something big that's happening, and the market's not appreciating it, but we can either help get it off the ground ourselves, maybe via some kind of investment, some kind of liquidity provisioning. We can help these guys raise capital from VCs. We can, do all sorts of things. Or maybe we launch or incubate some of these things internally and spin them out as an example. But there's a whole bunch of things that we can do by essentially being this capital allocator, this financier of this economy or inside this economy. So just like you've got giant capital allocators inside the US economy, and those aren't just all banks, right? There's some banks, there's some funds, there's some maybe investment advisors, there's family offices, there's ETFs, there's these different pools of capital within the US economy. We want to be one of the leading pools of capital in the Solana economy and basically help create that vision of Solana and really benefit from that along the way. So that's kind of ultimately our goal there, is to kind of help ride that wave, create the wave, and then of course ride it better than any of our competitors.
Parker, this has been a fascinating conversation. I really appreciate you stopping by and educating us on, the Solana ecosystem, what DATs do, and how DeFi Development Corp is working and building in this space. I think it really just illuminated for a lot of our members. So I want to ask you just one question before I let you leave here. After everything we've talked about today, right? What's one big idea or key takeaway you want people to walk away from with this conversation?
So I'd say two key numbers to keep your eye on if you're new to crypto or if you've been around for a while. 2 numbers: SOL to 10K and DFDV to 1 SOL per share. I'll leave it at that.
I love it. We're rooting for both of those. Thanks again, Parker, for joining us. Everyone, thank you for tuning in. This has been another Real Vision Masterclass with DeFi Development Corp. And of course, we were joined by Parker White, Chief Investment and Operation Officer at DFDV. Thanks again, Parker. Hope to talk to you soon. Take care, everyone.
Thanks for having me, guys.